Good evening, ladies and gentlemen. This is Greg Mikulowski from FXDD, and this is the New York Evening Far East opening Forex report. Well, it's actually a little later than usual. This is well, I had some problems with the computer. In fact, the hard drive went, and so I've been scrambling in order to get back on my feet here as far as my technology goes. But nevertheless, the show goes on. I apologize for those who were scheduled to participate in the webinar this afternoon. That had to be canceled as a result of my issues, but hopefully, by next week we'll be back up and running once again, full force. Let me remind everybody before we get started that trading Forex is risky and should only be done with the risk capital that will not change your lifestyle. FXDD reminds everybody that traders could lose all their risk capital trading Forex. We did not guarantee any recommendations made within this commentary. Traders should make market assessments to take trading positions based on their own personal market analysis, risk tolerance, and financial condition. In addition, care should be made to only use leverage, which is congruent with your personal risk tolerance, although care was taken in creating this report. FXC does not guarantee the accuracy of the information. Well, today we saw the euro come under pressure here, folks. It all started with worries about Greece, comments from the Prime Minister to the effect that the high cost of borrowing was going to be an issue. They were looking for support from the EU, perhaps support from the IMF. Later, those things were denied in a strange set of circumstances, a strange set of comments, but nevertheless the euro dollar did remain under pressure. The other thing that happened here this afternoon was SMB official was speaking, and he commented how it's time for businesses and consumers to get used to rising borrowing costs and exchange rates set freely by the market. This sent the euro Swiss down rather sharply as the market still tries to figure out where that bottom is for the Euro Swiss now that Pandora's box was open, leaving the door open for further declines in the Euro Swiss to see where it may be going. So let's go and take a look at some of the markets. We'll start off with the euro versus US dollar and remind everybody on the daily chart here. We did market could not get up move toward what is that 38.2% retracement. That 38.2% retracement was our target level up at the 138.73 level. Another level of importance was 52. That was a low from this period right here, and the market could not really muster the energy to get up to that level. Yesterday was a high that came in at 138.17, and today you can see a sharp move to the downside and starting off a very narrow range here at 136.12. There is a trend line that coming in that we also broke here today. You can see that the market fell through that level of trend line, and that's going to be a level of importance as we head into the evening session. Let's move on to some of our other charts in the euro. Take a look at the hourly chart for this currency pair, and you can see that the market fell below the 100-hour moving average early in the Tokyo session. Those people who were around here last night at this time knew that market came down through that level, and that started the ball to the rolling to the downside. It did get through the 200-bar moving average, get to the 38.2% retracement, and the important level that we've always been paying attention here in the euro, I'll put in the horizontal line here, is a 136.91 level. And if you go back in time, look at these lows here, look at this high here, look at these highs here, look at the little fake out right here, a high right there, high right there, high right there. Use it to move to the upside. Break through here, use it as resistance here, break through the top, use it as resistance here today on a number of different occasions. This all started from this area right here. This is going back to February 23rd. That's when the 91 level first became a level of significance, and it certainly has lived up to that billing, and the market here in the New York session went up and tested that level, actually getting to a high of 94 and then started to move back to the downside. Rather sharp move, which took the market all the way down to 61.8% retracement of this move that took the market up from the lows in March to the high here in March, which occurred at the 138.17 level as once again. So the market did hold this 61.8% retracement, and we are staying more or less below the 50% retracement as well as 136 at the 136.27 level. So we'll be watching those two levels here with the market trading in between them as we head into the night session. Let's go to the 5-minute chart, see if there's any clues that the 5-minute chart could tell us as far far as a directional bias for the euro versus US dollar. And the one thing that obviously of note here is that this consolidation period that we are seeing here in this currency pair after the bottom was reached is allowing the 100-bar moving average to catch up with the price, and that the 100-bar moving average and the price are currently right on top of each other around the 136.11 area. So the market is going to have to make a choice whether it wants to move to the upside or continue the trend to the downside here that we've seen in the euro versus dollar over the course of today's trading day. The other thing of note here is that most of this, these 100-bar moving averages were held here, and we could not get above it. We did have one little break to the upside here, which was a little bit of a concern here. This red little box here, we were not able to get above the confirming 200-bar moving average, so that's also going to be a key level as we head into the night session. If we're able to break above the 100-bar moving average, look for resistance up here at this high, look for resistance up here against the 200-bar moving average. Let's move on to the sterling versus the US dollar, and the sterling also came down a little bit, although they had better data here today, which kind of gave the sterling a little bit of support. Better trade data out of the UK, which led to a little bit of a spike here, but overall the market is down on the day for that currency pair, and we are looking like we may move toward the 100-hour moving average at some point, test that at 151.94. Currently the price trading at 152.50, quite a bit of ways from now. Let's see if the 5-minute chart is teaching us anything here, and with the 5-minute chart, this spike was off of the trade numbers that did come out here this morning, and so we had a couple instances where the market was able to get above the 200-bar moving average here, but each of those times it almost looks very similar. Both times move up, come down, move up, come down, and over the afternoon segment, the sterling versus US dollar held that 100-bar moving average, but now we are starting to move above it, and this moving average is starting to move a little bit to the top side. That currently comes in around the 152.48 level. So the market's got a decision to make. Doesn't want to go to the top side and test this moving average up here. That's a 200-bar moving average, 152.67, or we're going to move back below the 152.48 level. We'll see how the market reacts. Those are your key levels here today. So watch the 48 level, stay above it. We should see the movement toward the 200-bar moving average. See if we can test that later in the night session. Now, I mentioned the dollar Swiss. We had the central bank official come in and took the market right down from what level? The 200-bar moving average, 200-hour moving average came up here. The price came right up to that level, and then started its move to the downside. We broke through back through the 100-hour moving average, and that 100-hour moving average currently comes in around the 105.74, 75 type area, and that's where the current market is trading. Look for sellers against that, as the central bank basically said that get ready for higher Swiss franc rates. Businesses out there, and also tightening down the road. We'll see if the market can stay below that 100-bar moving average, keep the pressure on the currency pair, and perhaps go and test the lows here at the 105.06 level on the daily basis. The significance of that level down there is it is the 200-bar moving average, or close to the 200-bar moving average. That's the green line. This chart's actually a little bit below that 105 level, 104.98, 97, something like that. That is where the 200-bar moving average is on the daily chart. That's where a target would be on the downside if the price can remain below the 100-hour moving average. So we'll be watching that very closely. Going to since we have the dollar Swiss on, might as well take a look at the euro Swiss, because this really fell out of bed here. You can see how the market just tumbled here over the comments, and the market has rebounded a little bit. This area where the market started to descend to the downside at 144.59 will be a level that the market will be paying attention going forward. So we'll be watching that. It also is a 38.2% retracement of the move down that we saw here today. So look for resistance on any move toward that level. Current price of 143.91. I would guess that the market is going to try to figure out where the lows are for the euro Swiss over time, given that that scenario that the central bank gave, or that free rein the central bank gave. Let's go to the dollar versus yen as we head into the night session. Dollar versus yen, once again, dodged the bullet and closing above the 100-day moving average. That 100-day moving average currently comes in at the par 90.07 level. We'll be watching that level, and we're also trying to move above the 100 and 200 bar moving average, which is starting to converge here at 90.35, 90.45. There's 40. There was a rumor today that pushed the market up here that the Fed would raise a discount rate. The key level on the top side for the dollar versus yen is the 90.72 level. We'll be watching that level on the top side. If we're able to maintain support above this brilliant blue and green line, we should see a move toward the 72 level. That's my evening report. Thank you very much. Greg Michalowski reporting for FXDD.